This week on the Retirement Quick Tips podcast, I'm recapping the third quarter of 2024 in the markets and the economy and looking ahead to the end of 2024 and turning the corner on a new year. Today, I'm talking about the stock market specifically as we wrap up the year, we head into the home stretch. It's been a bright spot for stocks. The S&P 500 is up over 20% this year. And what's interesting is if you looked at the first part of this year, most of the growth in the stock market in the first half of this year was all driven by primarily big tech. Like it was a very lopsided return. If you were invested in what's known as the Magnificent Seven, which are the biggest tech companies out there, you had a strong start to the year. If you weren't invested so heavily in those areas, and hopefully you weren't because we want to maintain diversification, then you saw that you maybe weren't keeping pace with the S&P 500 for the year. But then something happened in the middle part of the year, around early July, I think it was, where you had a more balanced return in the stock market. You can see this play out because the Dow Jones Industrial Average doesn't have all of these big tech names and doesn't have the same kind of concentrations that the S&P 500 has. But the Dow started to catch up more. So the Dow is still behind the S&P 500 for the year, but it's making headway. And the Dow was up 8.7% in the third quarter compared to the S&P 500 that was up 5.5%. So for the quarter, at least, it outpaced the S&P 500. And that's because you had other pockets of the market, other sectors like financials and utilities that started to outperform. So that's good. We want that. It's been a very unbalanced return in the stock market, not just last year, but you could go back all the way several years, even pre-COVID, where a lot of the biggest tech names were the drivers of the market. And a lot of other companies, businesses, good quality businesses were not keeping pace with that. So it looks like it's a more balanced recovery, which is good. We need that. The economy needs that. It's important to have that for a healthy, robust. You can't just have a handful of companies that are driving the stock market. So that's been a very positive development in the third quarter of this year. Another reason to be optimistic and another reason why stocks have done so well this year is because you have earnings growth. So the profitability, which undergirds the growth in the stock market earnings, that's expected to rise 10% in 2024 and expected to rise even more next year. So you're seeing that companies, some, not all, but a lot of companies are continuing to report bigger revenues, greater profitability, and that is helping to drive the stock market higher. AI has been a big trend this year that's really been a driver for stocks, and partly why the biggest tech names have outperformed so much is because there's this huge revolution in AI, and that is starting to spill over not just in the biggest tech companies, but impact on businesses in general, hiring, efficiency, etc. So it's been a great third quarter and a much more balanced recovery, which is really encouraging to see. And it looks like, barring any sort of external shocks, that we're going to end 2024 with a pretty good result overall. So I'll talk a little bit more later on in the week when I talk about investment opportunities about the election, because I know that is top of mind for a lot of people, especially as I record this and as you're listening to it. It's just a couple weeks away at this point. So I will talk more about that and address that. But the bottom line with the election is that it is not as big of a driver for the markets as the media and pretty much anybody who comments on this thinks. So if you're concerned about the stock market as it relates to the election, I wouldn't be. And I'll talk and explain more on why that is later on this week. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips podcast.